community call. Just wanted to say first we need to let people slowly join the call. I know this takes a little bit of time, but while they're joining, I wanted to say that, me and Jamie just had an awesome time, chatting. So it was a very happy, good vibe, and so I think we're entering into a very good community call now, and hopefully it will go well. And let me see slowly how the people are joining, like how are we doing with that? We're definitely live, and we are slowly ramping up. And Mike, thanks a lot for joining as well, supporting, awesome. And let me give a bit more time. Mike, how are you? How are things? How is life?
It has been a couple of crazy days, so you didn't hear much from me. I didn't bother you that much. It's, however, now really all coming together, and also Jamie, we're going to talk afterwards, right?
Yeah.
A few more interesting deals we get approached with. Let's do some stuff, some exciting stuff, and this will come to life. So we'll also need to chat though offline, Anton, about what you messaged us. All good.
Yes. Awesome. Yeah. Just to say that we are breaking records. I mean, we are now 5 people on this call in the studio. Max, Niklaus, hi to you guys. Please unmute and say something and introduce yourself if you would like to. Or wherever you feel comfortable. I mean, this is really, I'm just happy, there's 5 of us now. This is, never happened before. So it's awesome.
I can drop off, Anton, if it's too many
No. Please.
It's school holidays here. This gives me a good description from the kids downstairs. They're on school holidays, so it's nice to be here. But I can disappear if you want me to.
No. You said you were going to fill the many silent blanks, when I have nothing to say. So this is awesome.
Yeah, no problem.
Awesome. Okay, cool. So I think slowly we can kick it off. Max, Niklaus, at any point, if you want to go live or say something, just please let me know. I'm happy to, you're so just feel free to just say whenever you want to share something. So that's awesome and really happy. And we also have a good crowd on LinkedIn. So I think we're good to go. And I think just want to say maybe something that I would like to flag in the context of the up and coming fundraising for SwissAssetDAO. So fundraising is one thing, but I think what's very important is actually when you talk about fundraising is what problems are we solving? Why the time to solve this problem is right now? And why are we actually tapping into a big market or ideally or rapidly growing market, or ideally big and rapidly growing market? And also then to position a little bit SwissAssetDAO, how our mission, vision, and purpose kind of falls into that. So this is just something I would like to kind of maybe share or talk about today. I can also share my thoughts. I will focus mostly on the hard data that we can, reflect on kind of what SwissAssetDAO is doing and kind of position it. But I would really be happy kind of very much if we could kind of today talk about that a little bit for the whole community to really grasp the opportunity that we're capturing. And then kind of also, we're still working on the deck for the fundraising that I'm happy to slowly walk you through it so you kind of see how it looks like. But kind of the key topic would be about this. What are we doing? Why are we doing it? Why the time is right now? What's our mission, vision, purpose, and how it fits into the big picture? So this is what I will propose that we do for today. And want to say, Felipe, welcome to the call. Awesome. Really great to have you. And, please introduce yourself if you would like to. The stage is yours, yeah?
Hi there, thanks guys. Yes, I'm working with Max, entrepreneur in London. We're looking at the tokenization space. We're happy to share what we're working on at the moment and ideas with you, but also really excited to learn more about what you guys are doing.
Awesome, thanks a lot. Would you like to share kind of immediately now at the beginning a little bit, and maybe also to share kind of what attracted you to SwissAssetDAO, kind of that we, hear it a bit more from you, and then we can kick off other topics if that's fine, yeah?
Yeah, absolutely. So at the moment, we're looking specifically at tokenization of alternative assets for funds, whether it be in the UK, EU, US. We're looking at the legal structure side of things and how we can bridge the gap in between sort of DeFi, traditional finance is the best ways to go about doing that. So me and Max have just started sort of looking at this in depth. And yeah, we're sort of exploring the different areas and ideas of how to go about doing that at the moment. But yeah, I'm very excited to learn more about you guys, learn about you guys through research and also Max. So yeah, hopefully we can build a connection. Hope to learn more about what you guys are doing.
Awesome, yeah. Thanks a lot. I think then we have added a little bit more what we want to share today in terms of how SwissAssetDAO fits into the big picture. So maybe I can just share things a little bit on my side, how I see what SwissAssetDAO is actually doing and kind of where we are finding our place. And just to kind of the way I summarize the mission statement, SwissAssetDAO in one sentence, is that SwissAssetDAO is building a Web3 securitization platform that will provide access to the real-world assets and the real-world asset investment opportunities, with initially on the DAO ecosystem. So this is kind of really high level how what securitization platform. I mean, if you kind of know a little bit coming from the traditional finance space, then kind of that there are structures in place. There are entities that manage those structures, that entities that actually manage the asset or the investment of that structure, and kind of these are these building blocks. But I think first, in terms of do I see why is it so important that right now we give access to the DAO ecosystem to invest into real world assets? So let me kind of to portray it for the people how I see it. I think in terms of why is right now the right timing to provide access to real world asset investment opportunities. And here I usually, Jamie and myself had a discussion last time about this, is that the yield at the moment in the crypto world is effectively zero. A year ago or 2 years ago, you had BlockFi, you had Gemini, you had Genesis, Voyager, Celsius. I mean, you can name them. They were all promising you very attractive yields on your cryptos, on your stablecoins. And the whole crypto ecosystem was deploying their capital there. That's just how things worked. Now we realize actually that all or most of these yields were highly unsustainable or at worst outright scams. And to tell you, I mean, BlockFi in the meantime bankrupted, Genesis bankrupted, Gemini bankrupted, or at least on the lending side, Voyager, Celsius, and so on. And I think the biggest example was Anchor on Terra Luna, which was promising 20% yield out of nowhere. And kind of all of these, players that were promising you yield actually blew up because they were offering an unsustainable product or an outright scam. So this is actually one thing. Yield in the crypto world is zero. That's a fact. But then something happened highly related to the crypto world is that the Fed raised from 0 to 5%. So today you have actually very simple, well-known, at least well-known to the finance community, liquid actually, real-world assets that give you very high yield, which starting from US Treasury, they are at around 5-6%. So that means, obviously all the other risks, asset classes, when you look at them from risk perspective, their yield went up as well. So their yield is even higher. Mortgages now today, yield 30-year mortgage, I think it's like 9% or 8%. So crypto world yield goes to zero, real world yield goes up, and it's at attractive level. So this is why the timing is right now is very attractive if you want to deploy capital in the real world. But that was not the case year ago, 2 years ago, 3 years ago, because the year rates were at zero. You could not offer anything fairly simple or convenient to, also liquid in the end, in the real world that the crypto community would be interested in. So this is kind of why the timing is now. Now, the second question from my perspective is, if we're talking about DAO ecosystem, why right now? Today, you have more than 12,000 DAOs. I'm sure a lot of people think it's actually 12 or 1,200 DAOs, but it's 12,000 DAOs. Now, I'm not saying all of them are the right fit for SwissAssetDAO. I'm not saying that all of them actually could be our clients, because obviously we as an entity that provides services to DAOs in a sense of access to real-world assets, we as a DAO, which we are a legal entity, we have to work with legal entity, or we have to help them and support them become legal entities. A lot of these things, we cannot work with everyone. But, from those, of DAOs, there's 12,000 DAOs actually, so which is a big number. This is a rapidly growing number, so they anticipate that in the near future, every crypto project will be a DAO. except maybe the highly regulated, maybe crypto banks will not be DAOs, or regulated crypto exchanges will not be DAOs, or unlikely they will be DAOs, but pretty much everything or everybody will be a DAO. So that's the case. But then I think like the second point, actually, then to kind of wrap up things on my side, I also want to give you what's actually the size of the capital of the DAOs. So I have here the number. So on June 13, 2023, there was 12,745 DAOs with a total treasury of 18 billion. So this is the number, 18 billion. I'm not saying all of it, but this is the chunk that we are going after. And let's enable that this total DAO treasury gets access to highly attractive yields in the real world. So when somebody asks you, why are you doing it? Why are you giving access to real world assets? Crypto yield 0, real world yield go up. It's high and it's attractive. Why to DAOs as a starting point? Why we pitch it to DAOs? Tell them more than 12,000 DAOs and rapidly growing. In the future, everybody will be a DAO. And today they manage a treasury over 18 billion, probably because Bitcoin went up since June, probably even higher. So this is a little bit, I think a motivational speech from me, a little bit kind of like to open up the discussion, but I would very happy to pass the word to, Jamie, Mike, Philippe, how you see it. But this is kind of like when I want to portray to the DAO ecosystem why this is so important, why now this is kind of my message. So guys, I pass the word to you and enough talking for me.
Well, I think the ETH maxis out there have been waiting for the flippening for a long time, but I think we've had our own flippening here with sort of the yields, this inversion that you're talking about. So I think that's undeniable. You had the centralized, the CeFi businesses, which of course went bust that you're referring to, but there was also sort of DeFi summer there 2 years ago, and I think the bottoms dropped out of the yields available in the whole DeFi space too, because that's sort of more a recursive, internally looking yield generating business. In terms of the DAOs, I think the volume that you're talking about there, Anton, I think the largest percentage of that is within the top 20 or 50 DAOs. So it sort of gives us a clear sort of target market. I think that the DAO industry does have a long tail, but I think you can look up some leaderboards there with the sort of DAO treasuries that are available, and the largest ones out there I think are over $2 billion US of balance sheet, which is effectively equity funded and should be being put to use to the extent that it can. So anyway, these are just obvious points. I think I've said enough there. I'll hand it over to Michael. Oh, so okay.
Yes, I really like the point that you make, which is completely different to normally this whole RWA space is approached. We know about tokenization for so many years, and every tokenization project has the distribution problem, right? Who are you going to sell these tokens to? But what you frame here is a different proposition, right? We actually start not with the supply of tokens, but actually what tokenization, RWA assets, but the demand, right? What is the potential demand? What the market is everybody who's investing into, not the asset base that needs to be invested in the end. So framing that and focusing on the demand. What do people want to invest into? How can it be accessed? How can it be accessed in the best conditions, terms, efficiency is going to be critical. And I think it's also differentiated. So impressive numbers for sure.
I was speaking to someone. I might just chime in here and just. Oh, I think you're on mute there, Anton. Sorry. Go ahead.
No worries, guys. I'm just playing with zooming in, zooming out. So just go ahead, talk. I'll be hiding here. Okay.
Look, I think I was speaking to someone yesterday who's been in the space for a while. I myself started looking at tokenization about 4 years ago, trying to make real-world assets available to institutional investors. Now, I think I look back on that and I smile because it was a bit naive. The institutions weren't there then, and they're probably not really quite ready for it yet. But I think there's a certain inevitability about traditional institutional investors, real-world money investors coming into this space. I think there is sort of a chicken and egg situation there, whereby no institution really wants to go first, and the promise of liquidity that comes from fractionalization of real world assets doesn't really, that benefit doesn't really accrue to the first person that tokenizes their asset, because there's no one to sell it to. And so that institutional market is, I think, sort of hanging on the sidelines. I think it will come along, but I think what the opportunity we've got here is to build something and make it available to a crypto native investor base that currently exists in size. We can actually refine the offering, and I think that may actually make it a little bit easier, not to mention for institutions to get on board, but in the same breath, it'll actually allow us to build something to the level of sophistication now that can actually be commercialized even before the institutions get here, so that we'll be in a very good position once they do arrive.
Hey guys, can I add here something? Hi everyone. So to the Jamie's point, I would like for us to shift our attention a little bit from here. So what Jamie said, like for us to give those how to attract those like what do really those institutional investors want, and what it is blockchain really, how it helps, why we are talking about tokenization of the assets. So I think that the main reason for assets to be tokenized is because blockchain provides really so much more efficient rails for the assets to be on. And this is like a key, I think, here. So we as an asset DAO, and if we really looking to build some kind of infrastructure, what Anton said, Web3, I don't really like this term, but like the platform for the tokenization, that's kind of the key. If we give those institutions tools to, like they already have those assets, right? So the big, I don't know, big guys, big JP Morgans of the world, they already have those assets, okay? And what we need to give them is the platform so they can easily deploy those assets on the blockchain rails. And that will give them the better technology and the better rails to do it. Plus, that will give to whoever wants, like people like us, crypto natives, DAOs, whoever it is, just the better rails for, you know, to acquire those real world assets. And that's not about the yield, which is like, well, 5%, okay, but it's still not like nothing. Even now you can go to DeFi and find a better, you know, more attractive yield with more risk, of course, but that's another story. So that's kind of my 2 Satoshis here, if you will.
Yeah, but just to ask, I mean, Sergey, in that sense, you kind of positioned it, if I understand, that the institutions are not the right client target segment for us. You know, for us, the target client segment is the crypto ecosystem, the crypto projects, the DAOs sitting on billions of treasuries that cannot access, because JP Morgan, I mean, they have, any institutional player in the TradFi can get a securities account with Goldman Sachs if they're big enough. If they're smaller, then they go to some other banks. Yeah, I think Jamie is nodding, and they can buy treasuries at lower cost than what we can offer them. I know that for sure, actually, from my HFTs days in the hedge fund. So I think like the right target client segment for us is actually the DAOs, because the DAOs are the ones who struggle to get. I mean, you said there are some opportunities. I mean, I said the yield is 0. Yes, you can go on Curve and deploy some capital there, but I think we were talking about with less risks. Then maybe US Treasury are somewhere, I don't know, higher risk or lower risk, we can argue probably same, like from a philosophical perspective, same risks. But yeah, I think you position it that institutional investors are not our target client segment. These guys don't need us literally somehow, I feel, yeah. I don't know how you feel about that.
Well, I think I was the one that raised it. I think Sergey's addressing my problem, my point. I could be the outlier here, thinking that they will arrive at some stage in the future. We can debate that perhaps at a later point. That was my view, is that we can get something off the ground now, address a significant addressable market, commercialize something where there's real demand, and I think it'll be able to be redeployed, or at least will be well positioned when the institutions do actually get here. I think you'll find that an awful lot of banks and others do actually have teams internally that are looking at how they can leverage blockchain DLT and even sort of get involved in crypto, whether it's sort of on a permissioned, whether it's on an enterprise blockchain, whether it's in a walled garden or some other sort of mid ground. But anyway, that's perhaps a discussion for another day.
Yeah, exactly. My point was to, when I say to shift a little bit the focus, that what I mean. So yeah, of course, we can debate now, well, we have this $18 billion out there waiting for some yield, what DAOs have in their treasuries. But longer term, what I mean is that the market is trillions of dollars, and the market is, it's the traditional financial assets. Let's talk about the bond market. Let's talk about the stock market, right? The blockchain is perfect for those assets to be issued like on chain, right? So if we imagine, if we imagine that, and here we can like provide the platform for those guys who hold those assets, which are known names. And so you can say like, hey, like, here you can like save some money transacting with your peers, and every other participants. Plus you have here some crypto bros who have a few, I don't know, $1 trillion in a pocket. They also want, to buy, I don't know, an Apple stock natively issued on in a form of the token, right? So not some wrapping L2 L3 thing, but real stock issued by Apple Corporation natively on the blockchain. Yoo-hoo! So here we have a totally different situation and totally different prospect for us. Yeah. So that's what was my point.
Awesome, thanks a lot. Filippo, you want to chime in with your thoughts, how you see it?
Yeah, absolutely. I can back up everything that Sergey was saying previously. I worked for a number of years at an investment bank. I was doing trading at Morgan Stanley, and I know that their compliance side of things and the amount of in-house work that they do just in the back end is absolutely huge. So just looking at the aspects of if they can go and tokenize their securities or their client securities, the amount of cost savings, the amount of efficiency that would bring would be absolutely massive. I think a big question is the manner in which that would happen. Would it happen from your Morgan Stanleys and Goldman Sachs of the world going about tokenizing themselves, or would that actually be sort of from the exchanges in which they use to go and have the assets on? Already done and seen quite a few exchanges, particularly the Swiss exchange has been quite open to this, and there's been lots of innovation there. But I think that's a really big question for the next few years. Like, how will the actual mechanism go about happening, and who will actually be implementing these sort of tokenization mechanisms and systems?
That's a $50 trillion question, or maybe more.
I like the big numbers that we're discussing today. Very good, actually.
You see, Anton? Yeah, sure.
Yeah. Yes. Mike, sorry, I think I interrupted you. If you wanted to share something, yeah.
No, not at all. I think I made a point. I believe institutionals have not shown up for so many years, and the reason is not what we believe is that they're just slow in adopting, but more like the rails they are working with are so far working well for them. And if you now, even a traditional investor who holds these assets, let's say real estate, a REIT even, which is fractionalized and liquid and all sort of things, and now you have a tokenized REIT or a tokenized real estate in a completely different settlement mechanism, you now also have suddenly two non-fungible instruments. Maybe it's even the same REIT, right? And you cannot offset, you cannot look at them in the same e-banking or in your portfolio. You have suddenly two rails to manage. And that's actually detrimental. So the blockchain on its own, in a future state when it's going to be all the players connected and everything is liquid and so forth, then it makes sense. But to get there, the friction is actually bigger, so the hurdle is actually higher to really get there, because there is a working market. So when I talk to some tokenizers and more looking from the investor side, so they have sourced crypto wealth and now try to deploy that into interesting product in the real world, they voice quite strongly that we don't want to just emulate what is out there in terms of the real world assets. Anything that they can offer their existing clientele, so their crypto wealth, must have something they cannot get through traditional assets. Some sort of clever securitization, some sort of clever cash flow, social tokenization, and so forth. Just having the bread and butter real world asset just moved to blockchain will not solve their problem. So maybe a bit playing devil's advocate, but I think it takes a bit more. So that promise of institutions coming is slowly unfolding, but very slowly. All we see today is more, they have now built their technologies, but who actually are they going to sell to? We don't know. So I think they're just going to lock it in back into their e-banking systems to their traditional clients. So it's invisible to the client and they have one seamless access and they don't even notice. Otherwise, they will never be willing to change, to look at two different settlement mechanisms unless it's completely invisible. Yeah, I'll leave it there. Sorry, I think a bit controversial, but
Cool.
I think it's a big people problem at work,
Cool.
because for so long we didn't solve it. Maybe something we have missed.
Yes. Okay. Yeah. Yeah. I mean, I just want to echo, something that was mentioned, that the institutions have been there for a long time, but somehow never arrived. So maybe there's also a hint, that at least initially, we need to go where the demand is strong, where there's a need that we are addressing, and an urgent need. Yeah. And I just really want to talk about urgency. I think we need to be maybe aware that in a year or two, or maybe in a year, not less two, the rates might go down to zero again. Because if we have an economic downturn, and many people are pointing at that because of the high interest rates, especially in the US, that I'm highly doubtful that the US Central Bank, the Fed, will keep the rates at these high levels as there's an economic downturn. So let's be, diligent. Let's move fast. Let's build the infrastructure and the rails. Because, in a year, if we pitch people from crypto world, US Treasury is at zero, and they might, another anchor at another Terra Luna might pop out, and kind of the animal spirits might be kicked off again, and then again we have the same problems of unsustainable yields. So really wanted to flag, the narrative and the prerogative of urgency. We have an urgency as an ecosystem to make it happen within the next year or so. Same goes for SwissAssetDAO, obviously. Yeah. So this is kind of how just wanted to have a short discussion today around, today was a bit of a philosophical character. I think also maybe, Filippo, for you, we can, if Mike or Jamie, you want to jump in, because I've been talking a lot, to explain a little bit how our infrastructure is meant to operate, what do we offer, and kind of how these structures are meant to look like. Guys, I'm happy to pass the word to you. And don't know, we will notice how easily I have left the difficult direct questions to Mike and Jamie. So guys, the floor is yours. I'm muting myself.
Jamie, I'm volunteering you. You want to kick off?
Yeah. Okay. Well, I guess we're trying to build infrastructure to make real-world assets investable by crypto-native investors. So I think we're talking here about crypto investors who may not have the legal structure to allow them to invest in, let's say, real estate. Investing in real estate in different parts of the world requires that you are either a legal person there, or you have a certain residency, or some other feature of your being. And not all crypto native investors satisfy that. So we're trying to build a diverse range of infrastructure. This will include using our own balance sheet. We are a Swiss association registered in Zurich a couple of months ago. I think a couple of formalities still to go, but that is well underway. We have legal personality as a Swiss Verein, and we can invest, we can enter into contracts, we can sue in our own name, and we can take on assets. Additional to that, we are working on setting up a bunch of special purpose vehicle infrastructure. So special purpose vehicles are literally just companies set up in different parts of the world that allow us to invest in a diverse range of assets. There is a subgroup of SPVs, securitization vehicles, that they're generally used for securitization, where you can open up multiple compartments within each SPV. It's quite a good scaling solution. It allows you to have one SPV in, let's say, Luxembourg, that you could open up 100 different compartments that operate as almost ring-fenced companies under the same infrastructure. And each of those ring-fenced compartments allows investors to gain access to an asset that resides within that cell. I think we have a legal formulation in Switzerland that prevents us from having to address local securities laws. We're using an asset-backed loan type participation, and we have a flow-through sort of structure to allow investors to gain access to underlying assets in an institutional grade format. There's a lot of words in there. I can go into it more deeply, but that's kind of the essence of it, I think. There's still a scoping exercise going on as to exactly how many of these special purpose vehicles we need and where they would be best located. But there are certainly examples of them, depending on different banks and securitization companies' needs. We see them in Liechtenstein, Luxembourg, Cayman Islands, Delaware. I think there's a version in the UAE, and I feel like I've missed one there. So certainly in Singapore as well. So I'll just leave it there for now, but I'm happy to answer any questions offline if anyone's got them.
Wow. Very strong. We should send you all the time now for everything. Awesome. Mike, go ahead.
I think Jamie brings that across perfectly. And I also want to highlight, this is not necessarily something we came up just out of the blue, but this has been precedence, pretty much a template almost of this type of structuring in the TradFi world for many, many years. So it's well tested, it's well crafted, it's legally sound, and you can make sure this thing works in the real world. If it works in the real world, you don't have any sort of conflicts or all sort of questions coming up. What is it in the DeFi world, right? What is your token? What is it legal to move it around, right? Because you're by definition legal in the off-chain world as well. So we designed the law to work for us here in a completely legal way again, because it's designed starting from the law. And Jamie mentioned these couple of SPVs which are critical. There's also a complete off-the-shelf product, and if you look at different tokenization projects, they employ similar mechanisms. So we kind of in many ways also take note of these TradFi structures, and our ambition here is actually not only to make something similar, but to even be competitive in terms of efficiency, costs, off-ramp, on-ramp, and so forth with the TradFi world, right? Because we're going to compare FX transactions with on off-ramp transactions. It must be the same tight spreads. cannot be that you actually, to access the same real estate asset, let's say as an example, from the DeFi world, and you have to pay maybe 5% just from conversion charges, access charges, whereas you do it in the TradFi world, you have pretty much zero access costs, a couple of basis points for a read. So with that lens on, right, we aim high, but I think it's manageable and achievable. And Jamie mentioned that's why also these SPVs, which are compartmentalizable, can have compartments, are so critical, because that's where you get a lot of efficiencies in setting up these structures. And you can only do that in a couple of jurisdictions around the world, some of them very specialized for certain asset classes. Switzerland, unfortunately, is not one of them, doesn't allow the compartmentalization, but Liechtenstein does, Luxembourg does, a few in Europe, smaller islands out there, and definitely I think we need some hubs in all parts of the world. So I stop here. Yeah.
I think you're on mute there, Anton.
Just because I have nothing useful to say, I was just praising you how awesome these explanations were. So good. Yeah, that's it from me. I have nothing to add, guys. I think you, yeah, I think that was very strong actually. Yeah. So thanks a lot. Yeah. Yeah.
Okay.
Yeah. I think, I'm checking. We don't have any questions on LinkedIn. We have actually today quite a few viewers on YouTube. I think it's because there were some challenges that the community was telling us on Telegram. So we have, quite some nice people watching us on YouTube, but no questions from the community. But always, if the community has any questions, feel free to ask. But I think on this occasion, I hope it's because of everything the community could have imagined asking. Yeah. So I think that's it from me. Actually, I don't have anything further to add. I think this was awesome, actually, that we addressed today. It was a short, sweet call. Guys, if you want to add something, Filippo, and really thank you for joining. I know Max was here as well, at least. Actually, I will let you in. Sorry, Max, I just see now that you are happy to be here, yeah? You're muted, I think, actually. Or we don't hear you, yeah? No, take your time, yeah? We don't hear you. Okay, then just waving at you. Very good that we're in touch. Awesome. So I think this is a record, from 6 people who were on the call. So that's really awesome in the studio. And, thank you. Thanks, guys, a lot. That's it from me for today. If you want to add something, guys, the floor is yours. But otherwise, happy to, slowly wrap it up and then looking forward to the call, yeah.
Can you hear me now?
Yeah, here, Max. Go ahead, Max. The floor is yours.
Yeah. Yeah. Hi guys, it's happy to be here. It's like I think it's ending already, but yeah. Thanks for having us with Felipe. It was a really great conversation. Yeah. Just wanted to add, so it's just like really bullish on future of real world assets and how it can change the world and what value we can bring to people, both from a traditional finance and crypto world. So yeah.
Cool. Thanks a lot. Yeah, really great to have you. And hopefully also you can as well join. So we have a community call addressing kind of this topic more in terms of communication, community building, marketing, fundraising, every Wednesday at 5 p.m. Central European time. So if you're London, that's 4 p.m. And hopefully, again, guys, we have you on the community, and also that we have maybe a bit of a deeper discussion how we can collaborate. I think this is really what it's all about. How can we work together, help each other, and really scale real world assets, because they deserve that, and the timing is right to do that. Awesome. Cool. Thanks a lot,
you, guys.
Guys, really thank you, everyone, and talk to you. Really appreciate it.
Thank you.
And thanks to our community.
Thank you. Bye.
Listening to us. See ya.
Thanks, man.
Ciao. Bye.